Hey guys, it's Will. So we started the day in the green, confidence was high, everything was working in our favor. But then the market has a way of humbling us today with BigBear.AI is down 4%. And we made a kind of big mistake this morning, the kind that teaches you more than any win ever could. This is what we did. So let me walk you through. We're in this trade with on SOXS. We were basically looking for a short on the market. Last time we did this, we had our greatest return around the tariffs last time, and we were able to play the downside and hedge our position a little bit when it made that 142% gain on SOXS. When tariffs were introduced, we made about 75% of that trading SOXS. Now today we were trading it, and we have been for a while. In fact, right when it started to continue this trend, I set a stop just a little bit too high, around $4 a share. So we got out of the position, and then it continued up another 6% there on SOXS, and it's continuing to ride to 420. So that's what's going on. Then shortly after, what we did is we saw some news related to APLD. APLD, the data center company that has building some data centers, has been building data centers for big hyperscalers, just announced today that they came in with a $5 billion deal signed today. And so adding more revenue, and they were up to $36 pre-market. And then we entered around $32, but we did it over on APLX. Now the APLX trade that we're in is down about 3% right now. Do we hold it? Well, it's still kind of on this uptrend, this riding support level. So we're gonna hold it as it is rising. But yeah, this is definitely below where we probably should have managed. And again, missed out gains. It's like, not only do we see a little bit of a drawdown on this position here in APLX, but also it's like the biggest losses that you have are not always the ones that you invest in. It's the ones that you sell early, right? So that's what's going on today. We were betting against the market essentially in a hedge, which we could have held because we got long-term positions here. And then we sold it early, and then market continued a little bit of a dip this morning at market open. So there's the mistake. But what can we learn here from APLD? Same thing is true for BigBear.AI. We see BigBear.AI is down at a support level. While it looks like it might find that support around $7, we've been talking about that level. It is starting to sell off a little bit further. Now, could we stretch this out and say, maybe it's continuing up? Yeah, we could. But really, what we're watching here, some key levels as it sells down to that 675. We see new levels of support. There is a previous support around that level, but not the strongest when it dropped to 674 back on October 12th. Right now it's at 671 and bounced up to 676. So I am watching Big Bear right now for any bullish momentum, but really what we're looking at is a correction, sustained correction in the defense market. Guys, we're in the second longest government shutdown in history. So when we're looking at the government shutdown today, if you look at just according to BBC, which I don't know how reputable they are there, but 1.4 million federal employees are unpaid right now, and there's a budget dispute between Republicans and Democrats, and some essential services are getting suspended, and even potentially going to run out of money in, for example, things like SNAP or like the things that you get, food stamps, things like that stuff's actually potentially running out. Although some of them are funded on a state level, so I don't know how what's the integrity of that report there from BBC. But you do see, nevertheless, the second longest government shutdown in history, and that's true. And so as we're seeing, big tech kind of continue momentum for the most part. We've seen some momentum continue over the last week. For the most part, defense stocks are getting beat down. So the government shutdown, it basically means more bearishness for the government fueled companies. So companies like Big Bear, companies like CTM, companies like Redwire, these are companies that are really starting to get some momentum, starting to find their footing, securing some very large contracts, which they're probably still working on right now. But as far as new contracts, no, not really going to be happening there for a lot of these companies. And so When we're looking at BigBear.AI, we see it down to that 675. There's a 675 support level, and then they are also in this overall uptrend over the last year. We see them hold. Now, there's a bearish outlook or a conservatively bullish outlook on the long term, which would be a sell down into this level, a break at 675, sell back down to that $5 range, which would be a 21% sell down. I have long-term positions just to disclose to you, but I don't plan on selling them or adding at this moment either. But we could see something like this. It's quite possible. In fact, that's been the kind of recurring theme with Big Bear. See these big highs, then back down here. But when we're looking at the levels that they're at now, they are pricing in for what could be massive contracts in the future. We know that their infrastructure that they're building is pretty important for the government. The government, they care about things like, weapons and defense and, having TSA and probably detection of people and detection of, what's going on around with satellite imagery, maybe from the cars, the trucks, the airlines, the ports of entry, the ocean activity for sure. But really, what does the government care about right now in this day and age in 2025, getting into 2026? What does the government care about? It's going to be the data. And so we haven't seen it fully reflect in their financials just yet. But as they're doing the VeriScan technology and they're adding this biometrics to many airports, we've noticed they didn't see a big jump in revenue as a result. They got into over a dozen airports in the last year for their VeriScan technology, and big airports like we're talking about JFK and Denver International Airport and Charlotte and LAX and many others. And so they're getting into big airports and they're collecting a ton of data with the VeriScan. Their VeriScan, you can see, offers exceptional flexibility, seamlessly integrating with mobile devices, technologies deployed at major airports and ports of entry. And the VeriScan can essentially have vision, secure identity, authentication, enhancing convenience and operational efficiency and efficacy. And when we're looking at the financials, we do see the revenue hasn't had that growth that we maybe would expect as a result. And it's just because simply those contracts or those deployments seem to be more focused on the infrastructure than they are focused on the revenue. And so the revenue is there to an extent, but it's pretty flat annually. It's really only up about 2% year over year. The net income's negative, and we've talked about some of those write-offs. And they are positioned well now. Let's say that they continue to lose like they have lost the last few quarters. Can they continue to do that? They could continue to do that and still have some runway, as their assets have jumped up to about 600 million. So the total assets jumping 66% kind of gives them that runway and continuing to build. But here's the thing with BigBear.AI is when it comes to the technologies that they're deploying, I think part of the reason why they have partners with Palantir is because Palantir is in the data space and the software space almost more than in the direct warfare space. You look at a company like Big Bear and they have some contracts with the US Army. They have contracts with the Department of Defense. And their CEO even was previously U.S. Customs and Border Protection Commissioner, as well as Department of Homeland Security Secretary there. And that's just one piece of where they're going. You see the defense contracts or maybe the Army contracts, but those aren't really seeming to be the main focus for them. They are diversified enough. I don't think they're overly diversified, because if they were, we'd probably see them introduce something like a crypto fund or something that was like kind of out of left field for them, which they haven't done anything that would shake them off of their current markets. And while that's nice to see them kind of rigid and focused, it's also sometimes a little bit gut-wrenching when they have things like earnings and they're like very like focused and they don't do any Q&As for investors, but they're like, this is what we're doing, this is what we're doing, and this is how it is. We'd like to see, obviously that's kind of the that is the etiquette of a lot of people that work at the company. It seems that way. But when we're looking at the growth opportunities in TSA, they're supposedly looking for a $5.4 billion continuation of investment in the biometric ID and verification types of companies. And the only companies that I know of that are doing this technology are going to be BigBear.AI and then another company that's called Clear AI or Clear. It's called Clear. We could search biometric. Here it is. You might have seen Clear as well. They're very similar. And Clear has something that is kind of deployed at the airports as well, except they're working with TSA on like the on their own like setup where you can just go through the clear lane and get through the airport faster. They're also working with stadiums, which is kind of the same approach as BigBear. BigBear just signed a deal recently with the Washington Commanders, which is pretty strategically located right there by Washington D.C. So that could be some good growth for them. But if you look at some of their stadiums, you could see, Baltimore, Miami, Madison Square Garden, Nationals Park. This company, Clear, is actually expanding very rapidly into not just airports, but also stadiums as well. And I think that's probably some of the playbook that BigBear.AI took out, and is why they're kind of now competing with Clear. Now, Clear is more commercial. In fact, it seems they have a more focus on the commercial side of the consumer side, whereas BigBear.AI seems to be focusing more on the government side to business side. And Clear has both sides of it. But if you look at the focus from BigBear recently, they are focusing on things like the Panama Canal. And those are industries in travel and trade that Clear would probably definitely not touch. And so, for example, working in stadiums probably requires some of I don't want to say romantic, but definitely like more of a novel approach as a leader to be able to work with different commercial companies. And BigBear seems to be mainly focused on government threat detection and related to things like as we mentioned, you could see the computer vision, so going to the Panama Canal and things like that with the ARCUS. Saw some recent articles come out where they're monitoring the ports of entry. So they're going more like the warfare government side. However, if you look at some of the recent news articles from BigBear, they did just announce in the last 2 months, I think it was here, Washington Commanders, this partnership here. And that might expand into something similar to what Clear has been setting up. And so you got to watch that. That's a training complex, and BigBear is working with them. They're also strategically located there in Ashburn, Virginia. So that could be something good for BigBear as well. So we'll continue to watch, their expansion, but ultimately we're seeing a government shutdown where it's unlikely they're going to see more contracts. While they are preparing for things like the FIFA World Cup and the 2028 Olympics, they still have some legwork to do on the contract side to really continue to boost up that revenue. As the last 2 quarters, they have seen a little bit of a drop there in the revenue. And so we're going to watch here. Again, there's a level around $6.50 we're going to be watching here. See if they can potentially find that support level, which would be a very good recovery. We're talking about something between 20 to 40% recovery if they could continue that uptrend that they've been really bowling up with. But again, with the government shutdown continuing, and we don't know how long it's going to be, they say that they're closed. The next day they say that they're not. It might be a while. And if that's the case, this level here, when broken, next level of support is around $6 a share. So you got to watch there, maybe $6.50, but really $6.50 to $6 a share support on BigBear. So I'm going to continue to hold the long-term positions. I think in the next 18 months or so, this company is going to continue to do quite well. In the near term, there's definitely some more volatility, and that's something to watch out for. If you're entering any shorter-term trades, having margin or things like that would not be advised around this time in the markets. There's a lot of great companies, though, in the growth stages, despite this recent pullback the last 2 or 3 days. And I think there's a lot of companies too that are seeing infrastructure build while the market's pulled back. For example, APLD, this position that, again, we entered this morning that we kind of made a mistake on. Yeah, that position we're in, they just signed another $5 billion data center deal. And so that's a big key. We do see more launches from companies like Rocket Lab and in the space tech world. And robotics has been getting some momentum. ISRG had great earnings. They're up 16% as they're a company that does surgeon robotics, and they're crushing it today. So there's some good and green in the market to watch, and we'll be definitely focused on those opportunities, whether they're limited or not. And if you ever want to tune into our daily live trading sessions, get the best of the analysis that we do, see our entries, see our exits, it's going to be the second link in the description. You also get a free t-shirt for joining. We have a sale tied to the government shutdown, so who knows when it's going to end. But while it's there, you can grab access in the second link below. I would encourage you to simply take a look. If I earned your thumbs up, hit the like button. Do consider subscribing, and I'll see you in the next video. Take care.